Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Datang International Power Generation Co. Limited Annual Report. Datang International Power Generation Co. Limited offers a diverse range of businesses and services. The company generates electricity through various sources, including coal-fired, thermal, hydro, wind, nuclear, and solar power. In addition to power generation, it also supplies heat to customers. The company's other business segments include trading and cargo shipping, production and sale of alumina, sale of coal ash and integrated application of solid wastes, wholesale and trading of coal, and power and heat trading activities. These services cater to various needs in the energy sector, making Datang International Power Generation Co. Limited a comprehensive player in the industry. The company's operations are spread across different segments, including power generation, heat supply, trading, and waste management. Its diverse portfolio enables it to provide a wide range of products and services to its customers, solidifying its position as a major player in the energy sector. Datang International Power Generation Co. Limited market capitalization of $75 billion is significantly larger than the average industry peer of roughly $12 billion. This shows that Datang International Power Generation Co. Limited holds a significant advantage in their industry. And Datang International Power Generation Co. Limited trades at a higher price-to-earnings ratio of 9 times and a higher price-to-book ratio of 1.27 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 71% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.76%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data shows that the net cash flow from operating activities has increased by RMB 11,712,620 from 2024 to 2025. Reaching a substantial amount of RMB 37,835,693. This increase suggests that the company's business is becoming more efficient and profitable, enabling it to generate a substantial amount of cash from its daily operations. The positive operating cash flow indicates that the company has sufficient liquidity to meet its financial obligations and invest in growth opportunities. Overall, this trend is a positive sign for the company's future prospects. The company's debt level has undergone significant changes over time. A notable increase in total liabilities is observed, with a rise of RMB 4,840 million as mentioned on page 5. Furthermore, short-term loans have also seen an increase of 11.6%, page 15. However, despite the rising debt levels, interest expenses have shown a decrease. Specifically, there has been a reduction in finance costs by 16.54%, implied from page 4, and an explicit mention of a 16.6% decrease on page 23. Additionally, the calculated decrease in interest expense is $177,387, as mentioned on page 25. The performance of various segments in the company's operations has been mixed. The power and heat generation segment was a notable underperformer, experiencing a significant decline in profit from RMB 7,311,506 to RMB 11,531,731 over the given period. On the other hand, other segments demonstrated relatively stable profits, with only minor fluctuations between 2024 and 2025. Notably, revenue for these segments increased from RMB 5,960,919 to RMB 6,285,325 during this time. This suggests that while some areas of the business may be struggling, others are showing signs of growth and stability. Management is expressing a positive outlook for the company's financial future. They are confident that recent amendments to International Financial Reporting Standards (IFRS) standards will have no significant impact on the company's financial statements in the foreseeable future. This suggests that the company is well prepared to adapt to changes in accounting regulations and is not expecting any material disruptions to its operations. In particular, management notes that the introduction of IFRS 18 will primarily affect the presentation of the consolidated statement of profit or loss, but will not significantly impact recognition and measurement. This indicates that while there may be some changes to how financial information is presented, the underlying financial performance of the company is expected to remain stable. Overall, management's comments suggest a sense of stability and continuity in the company's financial outlook, with no significant concerns about the impact of IFRS amendments on its operations or financial performance. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of assets, businesses, or subsidiaries during the period under review. This suggests a stable and focused approach to business operations, with no major changes in its portfolio or structure. The company has a history of paying dividends to its shareholders. In the year ended December 2025, it paid out a total of RMB 739 million in cash dividends. This amount was distributed over 2 periods: an interim dividend of RMB 17,869,000 and a final dividend of RMB 721,124,000. The company has consistently paid dividends over the past few years, with payments made in 2024, RMB 149,267,000, and 2023, RMB 138,800,000. These figures demonstrate the company's commitment to returning value to its shareholders through dividend payments. That concludes the financial summary for Datang International Power Generation Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.